Welcome to Market Daily, where we cover Bitcoin, Ethereum, and the US stock market, including the S&P 500, Nasdaq, and major companies like Apple, Microsoft, NVDA, Tesla, Amazon, and BlackRock. We break down what moved markets, why it mattered, and how long-term investors can interpret the day's developments calmly and rationally without hype or speculation. In today's episode, S&P 500 and Nasdaq performance Treasury yield movements, Bitcoin and Ethereum price changes, ETF flows, and on-chain activity, key macro developments. We'll also address the most common fears people have on volatile market days and simple ways to stay steady and avoid emotional decisions. Before we begin, please note this content is provided for educational purposes only. I am not a financial advisor, and nothing in this video should be considered financial advice. All investments involve risk, including the potential loss of principal. Please conduct your own research and consult a qualified financial professional before making any investment decisions. Now let's get into it. Today was a clean risk-off day in US equities, the kind where markets stop romanticizing the future and start doing math in public. Investors tried to sort one big question: which business models get amplified by AI, and which ones get quietly replaced by it? Stocks repriced fast. Meanwhile, Bitcoin and Ethereum were modestly higher in our 24-hour snapshot, even as broader crypto market metrics looked softer. So yes, stocks panicked, crypto shrugged, mildly. At the 4 p.m. close, the S&P 500 finished at 6,832.76, down 1.6%. The Nasdaq ended at 22,597.15, down 2.0%, and the Dow closed at 49,451.98, down 1.3%. The story, per Reuters and the AP recap, was a rotation out of tech and other areas seen as vulnerable to AI disruption. And the key detail here is the sorting effect. Markets weren't selling everything equally. They were re-ranking business models in real time. In single names, Reuters highlighted a cluster of sharp moves: AAPL down 19.7%, Cisco down 12.3%, and several transport and logistics names down double digits, including Landstar, C.H. Robinson, and Expeditors. On the other side, Equinix gained 10.4% as investors leaned into AI-linked data center demand and outlook. So the tape gave us a clean contrast: perceived AI vulnerable versus perceived AI enabled. For the mega-cap check-in, Apple, Microsoft, NVIDIA, Tesla, Amazon, and BlackRock were all lower in our after-close read, and Reuters explicitly noted investors stepping back from highly liquid mega-caps during the sell-off. Important nuance: those mega-cap prints are after the close. The broader point is that today's pressure hit big, liquid tech alongside the rest of the market. Now zoom out to the backbone behind risk sentiment: rates. The US Treasury curve shows the 10-year at 4.09% for today's date, consistent with the yields-eased theme into the inflation data. Reuters framed tomorrow's January CPI as the next major macro checkpoint. And that CPI setup matters because it doesn't just move stocks, it moves the entire risk appetite thermostat. Which brings us to crypto. On crypto, as of our 7:21 p.m. Eastern Time snapshot, Coinbase showed Bitcoin up 2.38% over 24 hours, and Ethereum up 1.53%. At the same time, that same Coinbase market page showed the overall crypto market cap and 24-hour trading volume down on the day. So in this snapshot, majors looked steadier than the broader market footprint. Translation: Bitcoin and Ethereum held up better than the average coin swimming in the same pool. On the fundamental news backdrop, Reuters reported Coinbase posted a surprise quarterly loss and pointed to weaker trading volumes in a downbeat digital asset environment, alongside prior month spot Bitcoin ETF withdrawals, as context for how sentiment shifted after late 2025 peaks. Separately, Reuters reporting on Bithum's internal control failures and the regulatory reaction kept attention on operational risk and oversight in crypto venues. And in this market, operational risk is basically code for Don't pretend plumbing doesn't matter. One simple takeaway: today didn't deliver a single one headline explains everything crypto catalyst in top-tier sources by our cutoff. Instead, crypto moved in a tape shaped by sentiment, risk appetite, and industry earnings/regulatory headlines, while Bitcoin and Ethereum were modestly positive over the last 24 hours. And because sentiment in crypto still routes through one narrow choke point, we have to check it next. ETF flows. ETF flows today. As of 7:21 p.m. Eastern Time, I did not find an issuer-reported or Tier 2 outlet daily net flow figure for February 12th for either US spot Bitcoin ETFs or spot Ethereum ETFs. So today's daily flow line item is unavailable. What we do have in Tier 2 coverage is Reuters' note that spot Bitcoin ETFs saw sizable withdrawals in prior months, November, December, and January, which helps explain why flows remain a core narrative for sentiment. And when flows don't give a clean signal, the next instinct people have is to look for a smart money footprint. So, Whale Watch. Whale Watch is unavailable today. No institution grade, verified large wallet/on-chain item crossed the wires in the sources reviewed before cutoff. That's not a problem. Most days, the right move is to say no verified signal, rather than force a story and call it research. So with no clean whale headline and no confirmed daily flow print, what's left is the part most people skip.
Now we go into what I like to call Mindset Minute. Here's a fear and what people might be saying. I'm going to lose everything. I counteract and say, separate volatility from permanence, size exposure so you can sleep, and keep a long time horizon in mind. Here's fear number 2. I bought the top. I counteract and say, if your horizon is 3 to 5 plus years, a single entry point matters less than your process and consistency over time. And our last fear, headlines mean I must act now. I counteract and say, build an information diet, check facts on a schedule, not on adrenaline. Days like today are markets doing what they're built to do, reprice uncertainty. When the narrative shifts from AI lifts everything to AI creates winners and losers, the tape can look abrupt. That's not a sign the system is broken, it's the system clearing prices, which means the practical next step isn't panic, it's focus. Here's what to watch next. The near-term macro focal point is tomorrow's January CPI, which Reuters noted is due before the next session's open. On crypto, watch whether majors keep holding up versus the broader market metrics, and whether new issuer-level ETF flow reporting becomes available. If this was useful, like the video and subscribe. And if you want, drop a comment with the one data point you watch on days like this: yields, earnings, ETF flows, or something else. And remember, this is education, not financial advice.